Well, let's take a look at the Forex majors. Dollar yen is moving to the upside in Asian trade, back up to about 111.5 right now. Euro dollar also trying to get back up to the $1.47 mark. Well, let's bring in Stephen Rowles, analyst at CFC Seymour. Steve, great to have you with us once again. You know, the US dollar slipped once again in overnight trade, even though it seems to be a little higher against the yen today. Nonetheless, I want to ask you, why do you think it seems that risk appetite is back on in the currency markets, despite the fact that US equities were down once again overnight, and there are still lingering, if not still emerging, fears about what's going on in the US economy and also the subprime crisis?
Yeah, it's a very good point, and it's very hard to really give an example of why this is happening, because it's really an effect of a trader's market these days. It's not really an economist market right now, and just we're seeing such high volatility. And I think the best case of volatility is not only in the equities, but just in the Fed funds futures, as we're seeing a month ago, the chance for a rate cut in December was 0%. Last week it was 90%, and today it's just over 70%. So I think that the market is just really trying to get a hold of the whole subprime issue, and I think that we'll continue to see this until the end of the year, and then we'll focus on fundamentals once again, and that should restore some valuations into the US dollar again.
Okay, so we were hopefully looking forward to next year to we can work out some kind of strong trend in the Forex markets. In the meantime, though, before we get to the end of the year, we do have a Fed meeting, and at this stage, a cut does not seem to be fully priced into the market. What did you garner from the news out overnight with regards to slowing retail sales in the US, to the more benign than expected, it was a flat PPI. Does this mean that the Fed can cut if it wants to?
It can cut if it wants to, but I don't think it will. I think the main focus in the U.S. will be next week for the Thanksgiving weekend, which is the real kickoff for the holiday season. So we're going to see the real retail sales numbers come out next week. So that's something I'm really focusing on, and I think that we're going to see stronger than expected number. I think that the consumer in the U.S. remains resilient, and we should see that with strong retail sales in Thanksgiving next week.
Okay, so you're not expecting the Fed to cut come December, so they're done, do you think?
I think they're done for a while here. They'll be a little bit data dependent, but I think right now, just listening to Bernanke and listening to Fisher's statements last night, that the market seems a little too pessimistic about the U.S. economy, and I tend to agree with that, and I don't think that there's enough reason for a cut in December, and I think that will be data dependent, maybe see a cut in the first quarter, but right now I think things will remain on hold for a little bit.
Talking of growth data, we got some economic numbers out of the Eurozone overnight for the third quarter, which were actually stronger than expected. Do you think, however, there's the potential for this quarter, the fourth quarter of the calendar year, to be worse, and therefore keep the ECB still on hold?
Yeah, that's a very good point, and the global trend is in that direction as well. But I think the numbers yesterday pointed out that there might be just a little bit enough room for a bit of a nudge to have the ECB hike at least one more time in the first quarter we're looking for. And I think that we're continuing to see inflation come up as the hot topic in Euro land. So with softening GDP coming up in the forecast, I think maybe one hike more, and then it should ease and hold from then on.
Just very quickly, if I could just focus in on some of the local currencies, the peso for one, because we've got a Philippine Central Bank meeting today. Do you think they're likely to cut rates, and could that take some of the heat out of the peso?
I think they will cut rates today, and they cut last month, so it should be the second month in a row. It could be a bit of a tight call, but I think that they will eventually cut, strictly because inflation is at 2.7 and target is at between 4 and 5%. So the inflation is below target, and there's some concerns of the U.S. slowdown. It's going to hurt the export growth there, so a cut will help domestic demand. So overall, though, I think that it could lower the peso just for today, but still look for a stronger peso just because the strong remittances continue to come into the Philippine market. Okay, so the longer term trend is still to the upside. Steve, thank you very much for joining us today. Steve Rowles. Great, thanks, Amanda.
Analyst at CFC Seymour in Hong Kong. Just ahead, Digi's deal with time.